everybody, welcome to our big little experiment here. This is our inaugural roundtable in relation to developing Hong Kong as an international virtual asset center. The idea behind this was formulated because, of course, FinTech Week is a big event here in Hong Kong, and Hong Kong has always hosted a FinTech Day every year. This year, rather than a traditional panel, I wanted to experiment with a roundtable. Some people may think I'm crazy. I think I have 16 speakers here, which is a lot. And so therefore, hopefully, but the idea is to be interactive and to enable different people to voice their views, especially with the arrival of the anticipated announcement. So on Monday, for those that don't know, there were tremendous announcements that was made that we've been expecting. But by the same token, really excited about, right? And I think to speak for all of us in the ecosystem. And so we want to take the chance to invite lots of different friends and people within the ecosystem to share their initial impressions of the new rules and the policy and the way forward. So primarily, if one were to think about it, I think on the one hand, we're all quite disappointed that because of T8, we had to quickly pivot to be online. So thank you very much to my Dan and the rest of the team for quickly allowing us to do that. We were all ready to come together face to face and have drinks afterwards, but sorry, that's not to be. That's why I suddenly asked them to add the T8 edition, right? So we'll do the next one in person, I promise, right? But the idea is that this will be an ongoing kind of initiative. So with that, maybe we can go around the virtual room here in my screen. So that if you can briefly introduce yourselves and where you're from and the like. Thanks so much. Maybe start with you, Nathan.
Sure. My name's Nathan Simmons. I'm CCO for Victory Fintech. And before that, I was CCO for OSL, which was the first regulated VA platform.
Thanks, Nathan. Emil.
It's me, Emil. I was a banker, and then the last 10 years, I changed my career as a scholar to teach fintech in various schools, particularly CTU and Hong Kong U Space. And I'm helping startup in Cyberport as the veteran community member and mentor. So that's me. Thank you.
Thanks, Emil. Christy.
Hi, Christy Swartz. I'm a partner at DLA Piper. I specialize in regulatory and compliance in the fintech space. I deal a lot in the virtual assets, advising mostly governments, startups, and anyone looking to be licensed here in Hong Kong normally.
Thanks so much. Welcome, Christy. Rocky.
Hi, all. It's Rocky Moy, partner of Clifford Chance Hong Kong Funds and Investment Management Team. And I lead our Hong Kong Fintech practices for and look forward to the discussion.
Great to have you on board, Rocky. Victor.
Hi, hi everyone. I'm Victor Yim, head of fintech from Cyberport. So I work closely with most of you already. And before joining Cyberport, I was doing Red Tech and EKYC product. So very nice to be here. Thank you.
Welcome, Victor. Good drinks last night too. Henry.
Hi everyone, this is Henry. So I've been principal for like nearly 20 years. So for my first 10 years, I have been with like the high firm, Nostrils and Thresholds, and then being the investment bank for another 5 years before I set up my own firm and one law office like 6 years ago to specialize in fintech and blockchain. So like people thought like I was crazy at that time, but now it's good to see that now it become actually the announcement of Hong Kong being the international virtual asset center. So it's a big change.
Awesome. Welcome, Henry. Sam.
Hi. Well, Brian, thank you for inviting me to join this panel. I think it's wonderful to connect to new friends and reconnect to old friends. So my name is Sam Lee. I'm a founder and CEO of Constreet Partners. We are a 5-year-old service firm in the fintech area. We own a broker-dealer license in US and in the process of the ATS license in the US, and currently also in the process of the Type 1 digital asset license in Hong Kong. Separately, we run a big education initiative called the Digital Asset Series, actually together with some of the folks here on the panel. And we also one of the starter of the TARTS Award, which is the world first international award for tokenized asset and digitalized securities. And I noticed some of the judges from our awards is also on the panel here today. Thank you.
Thanks, Sam. Declaration of interest. I'm one of the judges. Louis, great to have you on.
Yeah. Hi everyone. I'm Louis, founder and managing director at Synergy Consulting Limited. We are a regulatory and compliance consultancy. Okay, we do everything that to do with like compliance and regulation in Hong Kong, and we have been lucky to be involved in the ATP, the trading platform applications in Hong Kong, and several sort of portfolio managers application in Hong Kong as well, which got through, and we got several in the pipeline working with SFC as well. And really happy to be on the panel in this roundtable to discuss the way forward.
Great, thanks so much, Louis. Frankie.
Hello, everyone. I am Frankie Tang, a technology lawyer at FHS Sutherland. In my work, I do advise on commercial structure in offering of digital assets and also transactions involving adoption of emerging technology. And I am a fellow alumni of Hong Kong U. Very pleased to be joining this event virtually.
Great, thanks, Frankie. We'd prefer if it were all in person, but I joke, one of the good things about being virtual, number one, we can open it up more. Number two, we don't have to wear masks when we talk, right? So that's a good thing. Sean.
You're certainly right about the mask part. Very, very good to meet all of you. My name is Sean. I'm based out of Hong Kong here, even though I do quite a bit of international travel. I wear both a older hat as well as a regulatory consultant hat. On the older side, I am part of a new project building a new blockchain in regard to managing multi-chain assets. And then at the same time, I do work for the Crypto Council for Innovation, which is a alliance of policymakers and crypto players in regards to regulatory advocacy. So we regularly have conversations with the likes of SEC, OFAC, MAS, and others. And certainly the latest news coming out of Hong Kong is getting a lot of the global players getting quite interested in regards to what this means for Hong Kong as a crypto hub. So very glad to be joining in the conversation here to talk further about that.
Great. Thanks so much, Sean. Neil, over to you.
Sure. Thanks a lot, Brian. My name is Neil Tan. I'm the chairman of the Fintech Association Hong Kong. I'm also the CEO for a company called Neptune Digital. We are a blockchain company, one with one chain inside of China and one outside of China. The overarching mission is to make Web3 accessible to everyone. Prior to Neptune, I was at HSBC as the head of business development for the digital partnerships and innovation team, doing embedded finance and also banking as a service. Thanks.
Great. Thanks so much, Neil. Hoi, is that a real picture? Are you really still in the office during T8 here? Oh, you're on mute, dude.
I am still in the office because my work from home setup is good for looking at contracts, but not so good for speaking at this session. So everyone, my name is Hoi Tak Leung. I'm a counsel at Ashurst here in Hong Kong. I'm a technology lawyer. I advise on anything where technology and the law intersect. Looking forward to today's session.
Great, thanks, Hoi. Ben, great to have you on.
Yeah, hey guys, so great to be joining this session. I know a few familiar faces here, so great to join. So I run ecosystems over at HKU, where I've been for about the last 4.5 years. One of the early kind of parts of the team. Been really exciting. I mean, from my vantage points, what's really been exciting is from middle of 2018, right before Hong Kong even announced this the original regulatory framework, to kind of be there in the early days and kind of advocate for the setting up of regulatory clarity, and then eventually once it did happen, right, I think as all of us today would agree, there's some things in there that weren't necessarily perfect, but I think all of us at that point in time were like, hey, step by step, baby steps on all this stuff. So it's quite exciting to see some of this stuff come together over the past 4 years, and HashKey is one of the the second approval in principle license holders for virtual asset trading in Hong Kong. Everything around potentially opening up to the retail trading in Hong Kong is very, very exciting to us. Not just from our own like business commercial point of view, but I think for people who are here working in Hong Kong, right, to see what this does to the community around Web3 and crypto as a whole in Hong Kong. So pretty excited to see all this come together.
Awesome, and great to have you on as well, Ben. Last but not least, we've got a special new guest, Duncan.
Hi, Brian. Actually, I'm driving, so I will keep my video off. And happy to be here. Nice meeting you all. I'm the Legislative Council member representing tech and innovation. So yeah, I just guess I would just stay Mill and hear out what you have to say about this new policy. I'm personally actually quite excited I'm actually surprised to actually get government's view about having the consultation on the retail investment side, because I've been talking to various departments before that and I get quite reluctant answers. So I'm happy to see this, and just let me know anything I can help to bridge and voice out to the government. Thanks. Great, glad to have you on as well, Duncan. And yes, I'm sure you would be surprised, because I think the last time I spoke to you, you were not very positive, and you put a couple of years in terms of the timeline for retail. Yeah, that's why I said I was surprised, because that's what my feel with my meetings and discussions with different officials, and I was feeling that retail was quite a way from being possible. But I mean, it's a good thing, that's good they have put in the consultation. But the problem is, the consultation can take quite a long time before it really materializes. So I think we have to follow up on these. Great, and we'll talk about timing a little bit later on where this is concerned too. So this is great, and I'm so pleased to have all of you all here. One of my jokes, I got a couple of jokes along those lines. One is that this means none of you, we were all meant to be in person, so none of you are at SFF, right? Because a lot of other speakers might otherwise be in Singapore, right? And none of you are at the Web3 Women's launch. So I'm so lucky to have Frankie, you, and Christy here, because otherwise my numbers should have been better, but I had a few declines. So next time we will make sure I balance my numbers better there. And the last aspect was that, in some ways we're lucky to have a lot of lawyers here, because I also invited quite a few institutional players, but a lot of them actually declined because they said it's a bit too sensitive. Right, and then they did not have authorization to speak on behalf of their organizations, and so it's actually good to have lawyers present who can speak more generally speaking, and you all speak to more clients as well, so you can speak to this space better. So without further ado, let me start the ball by setting the scene for all of you, and the audience as well. So welcome, audience. So the idea here is I'll set the scene in terms of the various aspects of the policy announcement, as well as Julia Leong's speech that happened on Monday. And then we'll really go topic by topic around the virtual room. I have some people in mind in terms of some of the topics, but if some of you would like to chime in specifically on that particular topic, feel free to use the raise hand function, and then I'll turn over to you. Okay, so that's kind of the lay of the land. As I said, the aim here today is, I think all of us agree this is a fantastic development. So what we want to do here is, what suggestions might we have, what thoughts might we have to make this work, right? So how do we make this work? What clarity do we need around certain aspects? What direction would we prefer it to go? So that's something for you all to have in mind. Okay, so without further ado, here is a brief snapshot that I got actually from one of Julia's presentations. So from the SFC's point of view, right now, from a licensing regime, there are 8 virtual asset fund managers. Some of you were involved in some of those licenses. There's one virtual exchange. Some of you are involved behind that as well. There's one exchange approved in principle. Some of you have disclosed that that's who you are as well. There are 2 brokers to VAs for client under owner's account. So really they gave a full landscape of what is currently licensed. The other thing that was revealed in Julia's talk was a product survey, which I thought was personally quite interesting, and I think helped convince, to Duncan's point, convince the regulators and the policymakers to consider opening retail. Namely, it was to say that investors bought $10 billion worth of virtual asset funds via overseas platforms in 2021. And that was up from 8 million the prior year.
So suddenly the argument is all these people are actually, buying offshore rather than buying in Hong Kong where they can get the Hong Kong protections. So from that point of view, so I think that to me was quite telling, and it was a very interesting statistic. Now we were all very excited when Paul Chan made the announcement on behalf of the FSTB and the initiatives. Here are some of the headlines. Firstly, on the SFC side, the SFC is going to start considering retail investor suitability for access for virtual assets. In other words, previously, as many of us would know, the regime only covers professional investors. Now, the consideration of offering it to retail with appropriate protections. Secondly, the areas of ETFs on virtual assets, and we'll come to that a little bit shortly, because again, this was just at the policy announcement, very high level. The policy announcement also mentioned that the government is looking at property rights for tokenized assets, as well as the legality of smart contracts. So this is where I think the technology lawyers might be salivating there, say, okay, right, finally, we get to maintain some better understanding and stability in terms of some of these interesting new technologies. On the area from the HKMAs, the stablecoin consultation is due out. And there was also mention of 3 pilot projects, namely the NFT issuances as part of FinTech Week. I didn't make it on second day. I didn't get mine. Did any of you get your NFTs? I forgot to pick mine up. There's a green bond tokenization, and there's an eHKD as well. That's actually going to be that's part of their pilot projects. Now, some more further details were shared by Julia when she gave her speech. She talked about it being an opportune time to review the PI only requirement and cited that statistic that I had given. So again, I think, so the door is now officially open. On the ETF side, again, they actually announced the circular on Monday as well, with an initial focus towards BTC and Ether futures traded on the Merc. But there's a road towards authorization of further ETFs or future VEAs, and look forward to Rocky's input as a funds lawyer on some of that. On the area of tokenized securities, I think another welcome feature was just because something is on the blockchain now doesn't mean it's a complex security, a complex product, right? So again, that's great news for a lot of folk who say, look, we might just be tokenizing a bond or fund, really kind of plain vanilla stuff. Why do we have to go through this? So I think that's welcome, and a circular and a modified STO regime is going to come. And then last but not least, talking about the VASP regime, again, that currently is being debated in LegCo, as many of us would know. But because now they're opening the doors in relation to the expanding it beyond PIs, I think there would be more, expect a public consultation in relation to that and the governance procedures and the listing criteria for VASPs who want to admit tokens for secondary market trading. Now, Julia specifically had mentioned that they are now currently extensively soft consulting the industry. So this is all live and all going in real steam, so in real time, I should say. So with that as a brief kind of overview, maybe we can turn first to Samson. So Samson, you as part of TADS and the like, you've been promoting and pushing for STOs and the like. Any initial thoughts and views in relation to these developments?
Oh, I think this is a great development. It's music to our ears. We have been waiting for this moment. I think now it's set a clear path. Although I agree with you, like from it still takes some time from the policy until it making into the regulation and taking effect on the market. There are many good lawyers here. I'm sure you can help on the process, and our LegCo members. But that's set a very clear direction, right? And and for all the practitioners, even the issuer, they also takes time to plan the project, right? So I think now, if everyone's looking at the same direction and start planning from their own position, whether they're issuer or they're like facilitator in the middle or investor, it gives them time to prepare. So in Hong Kong, I think, as you mentioned, like we are more focused on the STO. We actually have no choice and went ahead to US to start doing STO since 2018. And we are very glad that we see a good light in Hong Kong now. We can come back as a Hong Kong person is very happy to see that. In that aspect, I think Hong Kong is in a very unique position, right? Because but my personal view, I know maybe not everyone agree. The way I look at crypto markets is more like Forex, right? And STO is more like the equity markets. And also for crypto market, like Hong Kong might be already not in the best position because we know like a lot of places have moved on and built very mature system and liquidity and things like that. But for STO, literally, globally, everybody just starting. There's no real success case out there, right? So Hong Kong is really, if we start running now, we can possibly be a global leader. So I'm very positive on that. Thank you.
Thanks, Sam. Again, my background is, IPOs. So again, I came to Hong Kong actually doing IPOs. So with ICOs, I didn't look for it, but it found me. I mean, to me that, the possibility of Hong Kong being a center for digital assets, I think is very promising. And I'm really, pleased with that. Sean, you're traveling around the world these days. You've just come back from quite a few jurisdictions and also speaking to regulators and seeing different countries evolving in terms of their systems. Love to hear your thoughts.
I just put a quick comment on the chat box here. I'm going to quote that one from now on, Sam. Crypto is like Forex. I mean, I think those of us that are actually building, public networks, really do think that a lot of the native tokens that are being created as part of this ecosystem are indeed operating almost like a currency within a particular GDP, right? So rather than equities in a particular company. Now, of course, it takes a lot of efforts to convince policymakers around that notion. I'll say that I'm very glad that the conversation here in Hong Kong is no longer whether crypto assets should be considered as securities or commodities or everything else in between, right? That is still the ongoing conversation in the United States, where the council that I've joined are spending a lot of efforts in kind of debating between two sides. But you could also see from an international perspective that I think the token classification exercise is already kind of a foregone conclusion, right? You could see that most of these tokens, especially in Singapore, for example, are considered digital payments token. In Switzerland, they have a very clear definition of utility tokens, which is probably much more applicable towards the usage of what some of these are being used. So I'm actually very glad to see that. Now, in regards to what we all saw on especially on day one in terms of the announcements, piggyback on some of the announcement that came out from Singapore maybe a week before that, is certainly, there's no secret that Singapore and Hong Kong has always been in a competing position, including the timing of the FinTech Week. But it's interesting to see the announcement coming from Singapore, which seems to be moving further away from the retail side of things, and probably rightfully so because of 3AC and everything else that's happened in the last few months. But then Hong Kong moving much more into an open and inclusive environment from participants and market participants to be participating in the markets. I think that's very healthy. It remains to be seen how the implementation is going to occur and how it's going to be executed. And whether, I'll borrow something from what SBF mentioned, I think tweeted a few days ago. Is it 1 year too late, or is 1 year not long enough for some of these very large global players to consider coming back to Hong Kong? So I'll leave it on that for now, and happy to join in other conversations.
Great, thanks so much for that, Sean. And again, I think it's interesting, especially because we are not an island, right? Everybody's working in different directions in different ways. So I think it's great that we are on par and at least competitive, but the same token, importantly, protecting consumers, and we'll get to the consumer protection a little bit further. Neil, wearing your hat at the FinTech Association, again, a lot of our members, so declaration of interest, I'm on the board of the FinTech Association as well, but a lot of our members are very active, and you are actually active in the space as well. Love to hear your thoughts.
Sure, absolutely. No, I think, just to kind of echo what Sean has been talking about, I think as far as the markets are concerned, obviously there's a huge correction, right? And so we're inside of the crypto winter. A lot of the asset prices have come down significantly. That's number one. Number two is, as far as the leverage is concerned, you've seen that also kind of clear out from the pipes, if you will. And number three is, if we were playing cards, I think all the other jurisdictions have shown their cards. And in that way, we're in a beneficial way, seeing everything else so that we can make the right plays, or hopefully a more educated and a more comprehensive look at it. So the way that I kind of see it is the same thing is, devil's in the details. It's great that we're going in the right direction. I kind of equate it, since we were talking about, currency trading and so forth, is if you kind of look at the trading floor back in the day at Hong Kong Exchange, it was filled with a bunch of guys with vests and all that stuff. Now, how long did that kind of take to kind of transition out, right? So I think this is somewhat the same. In fact, it's probably going to impact significantly more layers of that second line of defense. And the so-called, if you're looking at the consulting firms, the overhead, which is what the efficiencies are coming from this type of technology. But I do think that, it's moving in the right directions. We've got the framework, we've got the benefit of seeing other people's cards. And I think it's also preferential for the markets, because then the retail investors can come in. And truth is the retail makes up the bulk of it at this point. We've been always talking about institutional. Institutional is coming in, but it hasn't come in droves, right? So, but yeah, those are my views at this point.
Muted accidentally. Hi, over to you, Victor. So again, Cyberport has got a large community of crypto firms and blockchain firms and digital asset firms, and you recently hosted an investor conference as well. So obviously, I presume the community there is quite excited about the developments too.
Yeah, absolutely. Thanks again for the invitation, Brian. So as the major fintech hub of Hong Kong, and we have a strong presence of blockchain, DLT, and Web3 company here in Cyberport, we totally welcome the policy statements from the government a few days back. And I think the how retail investor may be given a suitable degree to access is very encouraging to the whole community, not just to fintech, because apart from the 400 plus fintech startups and companies in our community, we also have our smart living as well as digital entertainment. So the of course Animoca brands that no one will not know about them now, but then there are a lot of others very promising, in the areas of art tech, in the areas of play to earn, move to earn. StepN is also in our communities. So I guess the previously, of course, a lot of financial institutions are kind of rushing into the metaverse. But yet, I think, as you might, if you visit FinTech Week, I'm sure pretty much all of you did, you will see in most of their booth, there will be some kind of metaverse showcases. But then I think those are still kind of experimental, and the use case are still very limited. It's still mainly publicity or some internal training engagement. But then with now opening up to retail for the digital asset, I think that will really brings in a lot of innovation and new use case being innovated to connect digital asset into the metaverse and into Web3, not just as an investment class. And of course, I think some of you like me might be having drinks on Monday nights, but some others might attend the Twitter webinar I have my colleagues representing Cyberport to have some statement, but it was so interesting, and it attracts more than 200,000 people joining, and it was in Chinese. So I think another thing that really echoing everything that we are talking about is Hong Kong being the connectors between China and the rest of the world, and Chinese with the rest of the world in other languages, right? So so it become viral, and the interesting part is, I mean, right after that seminar, there are people like reaching out to us wanting to land in Hong Kong. So there's like a major GameFi project from some really strong background founders. So we already like line up how do they can land in Hong Kong, how does the Cyberport program can support their development and growth. So yeah, I mean, we are super bullish on this, and also I guess one more thing to add to is I guess even without too much of our intervention because of the political uncertainty, the crypto digital asset community has been thriving in Cyberport. But then now with the government being so proactive and much more transparent and direct supporting this, I think as an innovation hub and fintech hub, we will definitely see more support and energy in further providing the kind of needed ecosystem to help. So yeah, that's how we.
Thanks, Victor. I think when I heard you told me about the Twitter story, I heard that the surprising thing was actually held in Putonghua. So obviously, you know, that plays towards the role of Hong Kong and the connector, and some people questioning, surprisingly, as Duncan had said earlier on, you know, given China's policy in relation to digital assets and how Hong Kong is, you know, charting ahead. So I think in for very interesting times. Victor, thanks so much. Emil, you also work with a lot of other organizations in the digital asset space. I mean, any initial thoughts there as well, and the reception?
Yeah, yeah. Because after I left the bank, I worked with a lot of startups. Then my coverage way beyond my previous experience. So from my understanding, you know, I was the head of operations of some branches in Asia. What I understand is that in order to let the new system run, our regulatory structure is a bit funny to the other leading countries. For example, in UK, we have FCA and PRA, and by function, they regulate the financial institution, but not by product. And even in China, we merged the two authority into one, namely the what's it called, CBA IRC in 2018. So why they merge it, why they structure in such a way is that it's easier, you know, to regulate the new products. Otherwise, in the case of Hong Kong, if you want to release a green bond, or you have a digitized product, and you have to go through 2 to 3 to 4 to 5 regulators, and then I don't think it is workable. So that's the first thing. I think the government, the legislator have to think about, you know, either merge the regulators or, you know, form a body so that they can cooperate to administer this. The other thing is that I'm a bit better on EHKD. Rather than focusing only in Hong Kong, fixing our own problem, EHKD is the ultra stable coin that already exists. The only thing that it is not in the form of the stable coin we understand is the digitalization. It's not on token. So when it is tokenized, so I do think that, you know, the whole world, the investors, the banks, they will lean on EHKD, which is packed with US dollar. And this is the most important thing that we have to focus on. Yeah, that's my 2 cents.
Great, thanks, Emil. So some positive kind of suggestions already coming out from the discussions. Again, we want to be constructive here to say, so what can be changed? Although your suggestion is really on the macro level, right? So what I share is, places like Singapore have got a universal regulator, which makes things easier, but other places that don't have universal regulators, that's a bigger question that has to be solved at a much higher level, but that can help. But as you say, some other countries have got arms. So in the US, the president is actually trying to have certain policies done at the federal level to kind of coordinate the different agencies. So perhaps that can be done, and maybe is increasingly being done here in Hong Kong as well. Great. No, thanks so much for that. Those remarks will give you a feel from the broader industry perspective. Now going down to a little bit more of the details. So retail, of course, is the big question mark. So I actually asked a couple of poll questions to the audience. The first question asked, do you think virtual assets should be allowed to be offered to retail investors? 94% yes, 6% no. Right, so not all true believers here, so to speak, right? So that was my first question. The second question I had was, what are good ideas for protecting Hong Kong non-PI investors of virtual assets? So I threw up a few different things, right? And I'm again interested to see what people say. So the knowledge-based quizzes is actually what SBF actually mentioned on the stage, right? So there's some take for that, 46%. And we have 113 participants, so not a bad cross section, although probably slightly self-selecting, right? Large and established virtual asset issuers, about 40%. Cap on investment in individual virtual assets. So that idea comes from kind of crowdfunding kind of framework. So that's only 19%. Aggregate cap on investment in virtual assets as per net worth, 21%. So people don't think that we should cap individual assets. They can go all in on things that they like, as opposed to not, it seems. And they don't want to be capped in terms of their overall net worth, which often is seen as a protection under, again, a crowdfunding kind of legislation around the world. Minimum disclosure requirements, yes, 46%. Minimum token listing criteria, 36%, and then others. So I should have set a separate category. So if you have an other idea, please share it on the chat so that we can see, again, your thoughts in relation to that. And then I also asked everyone, what they thought of the government pilot projects are the most promising or interesting. So NFT issuance of the FinTech week, 31%, although as I said, I didn't get mine. I should go back and see whether I can get mine somehow, right? Green bond tokenization, and then Emilio E, Hong Kong dollar, 46%. People like that one, right? So again, just want to share that with the audience a little bit. Anyone want to have any kind of initial impressions where that's concerned? Any surprises? So maybe we can go and start with some of the regulatory experts, or maybe we'll start with. We have a couple of people that have experiences within the exchanges. So maybe if I don't mind, I'll start with you, Ben, a little bit. Right, putting you on the spot there, right? So again, I think you're a big fan of retail coming in, right? So I think you're very happy with the news. In fact, that means one of my student projects will need to pivot, but that's a good thing, right? So declaration of interest. Some of my LITE Lab students are actually working with Ben in relation to some of his research pieces. So any initial thoughts in relation to some of the audience feedback, and any other thoughts you may have in relation to how because it's going to be outfits like yours that will be managing this, right? And so it's open, but how big? Over to you. Thanks.
Yeah. I think there's quite a lot of good ideas there, right? Everything from the knowledge-based tests to to different things the SFC has thought through around like minimum token listing criteria and things like this. I think they're also quite good. I personally, I'm kind of an advocate of one of these ideas, right? So in terms of like minimum limiting investors' exposures, right? I think it's actually very, I think the SFC has a very complicated job, and also the industry, which is like, how do you actually identify the risks in different types of assets, and then choose like which of these assets to allow retail to trade, right? I mean, you can. It's not a straightforward thing, right? It's subjective in some ways, and you can have objective criteria, and you can do your best as much as possible. But like there's always there's always projects or assets that might slip through the cracks, right? Everything with Terra Luna and stuff like that is a great example, right? Here's an asset that was a top market cap asset, a lot of good holders, a lot of good investors. I mean, a lot of good projects building on top of it, and then the whole thing goes to zero, right? And some people bet against it, some people bet for it. Who knows, right? But the moral of the story is that, or the short form of the story is that there's always things that will slip through the cracks when retail starts trading a higher risk but more interesting, innovative assets. So outside of kind of the I think the usual suspects in terms of which types of assets could be traded, I think one idea, the idea around limiting for a certain, let's say for the long tail of assets, right? Let's not say like large assets and things like that, but let's say for a long tail of assets where the regulators, the regulator in Hong Kong might say, okay, we don't know about all these different, the long tail of all these different assets, but we see that some of these might be built by Web3 companies, or we do still want to encourage innovation. How might we allow retail to trade some of these assets while not knowing how to really in detail like quantify the risks of all these different assets, right? So an easy way to do that is maybe you just put a cap for that like long tail of assets, right? Not for like the mainstream, the mainstream assets, but for the long tail assets, right? You could say, well, instead of trying to figure out the objective criteria for trading of all these different things, let's cap it at, let's say 10%, 15%, 20%, right? So if there's an retail investor that is only earning $1 million Hong Kong dollars per year, for example, you say, hey, they cannot invest more than 100K Hong Kong dollar into these types of assets. Not the mainstream assets, like, because you want to be careful, right? So if you set some type of like minimum investment threshold on an asset like Bitcoin or Ethereum, that I think would kind of defeat the purpose of opening this up, and you haven't seen that in any other jurisdiction. I think what I'm referring to there is like things, let's say things that are like the 200 market cap, 300 market cap, or let's say someone mentioned Animoca earlier, right? Let's say it's a really new and cool, interesting GameFi application that's just come out, or maybe it's some type of application that has an intersection with entertainment and music. And maybe it's like an NFT paired with some type of Web3 coin that retail can trade, but there's a new user experience, but it's not a super huge market cap, right? Does it really make sense to limit retail from trading that? I mean, I could see both sides of the argument, but you could say, well, we do want retail to be able to have exposure to these types of innovative things, but sorry, you can't trade any more than 10% of your annual income in that, right? And I think something like that, actually, there's a precedent in the industry around that, right? If you look at the US, the regulation A+, it's very clear. I mean, although that's for crowdfunding and things like that, like it still shows an example of how a regulator in one of the world's biggest, the world's largest capital markets has really tried to, balance, innovation and financial inclusion with the need for investor protections, right? So, for example, in Regulation A+ and all these different crowdfunding projects, you could say, okay, well, allowing retail to invest in some earlier stage projects, or allowing retail to kind of invest in smaller things, gives them the same opportunities that venture capitalists and private equity investors have, but we're going to limit kind of the downside risk on this. So anyway, long story short, I think that I think there's many different ways you can do it. I think the ideas that were presented in that poll are all quite interesting. I think setting some type of investment threshold for kind of that longer tail of assets, things that might be 200, 300, 400 market cap or just newly released, could be an interesting way to allow users and investors to get exposure and kind of participate in this new type of Web3 economy, while kind of limiting the downside risk exposure.
Awesome. No, thanks for that feedback, Ben. That's my list. So, but again, I don't know the answers. I want to hear what other people think, right? Nathan, again, you're from the other side as well. Love to hear your thoughts.
Sure. So, I mean, I think all the operators that I've spoken to are pretty happy with the announcements overall. I mean, I think it's a tremendous step forward for Hong Kong, and it is very, very helpful to clarify which way they're going, the SLC and LegCo particularly. I think on the professional investor point, I mean, there is a broader point here about access to financial inclusion and access to products. And I think it's great that Hong Kong is now saying we're going to have regulated onshore platforms rather than sort of de facto pushing people offshore to unregulated platforms. So I think having good operators here that can service Hong Kong people, I think that's super important. Going forward, I guess the only question now is what's the alignment between the AMLO bill, the amendments to AMLO versus the SFO, and will the requirements be fairly similar between the two, or will we end up with a bifurcated market of sort of retail access on the one hand and professional investor access on the other? And then that goes through at an operational level to, do you combine those liquidity pools between retail and institutional flows? So I think that's sort of one pending area that obviously will come out in the consulting and will need some clarification. Aside from that, I mean, in terms of the institutional space, one thing I was perhaps looking for was a little more clarity on derivatives, because the institutions are definitely, aiming for derivatives and wanting derivatives exposure to hedge some of their flows. So I think that's something that hopefully is in the future. I certainly sense that if Hong Kong's going down the route of wanting to be a true financial hub for this business, that will need to come in the next couple of years. Aside from that, another point on the retail flow is, as we've seen today, Deribit had a fairly significant hack on their hot wallets. So if there is going to be the requirement for hot wallets and cold wallets to be insured, from an operator point of view, that can be a significant expense. So retail flows tend to need larger hot wallets to service withdrawals. So I certainly think that going forward, it would be helpful to have some cross-industry talks about how to appropriately insure these assets, because that's a very important part of investor protection that I'm sure the SFC wants to maintain.
Great. Thanks for that. So are there many insurance companies out there? I think that's one of the complaints, right? And the premiums are really high and there are not a lot of insurers out there.
Yeah, correct. And the ones that are there are largely syndicating the risks anyway. So, you can go through different brokers and try to get a marginally better deal, but largely it's sort of a fairly standardized contract that has a high premium. So yeah, there are a couple of options, but I'd hope that the demand for the products for the insurance will go up, and then hopefully that'll drive more insurers into the market. But I think that's something that additional guidance and risk management from operators who are serious about it need to really dive deep on it with insurers.
Awesome, thanks so much. So Henry, you were actually next on my list before you even raised your hand. So because I know you work with a lot of operators or would-be operators as well. So love to hear your thoughts. You're on mute.
Yeah, I'm mute. Yeah. But I think this is a really serious and big question indeed. As some of you may know, I'm a big advocate for opening up the crypto market for the retail for years. But after going through what happened earlier this year with the Lunar Terror and all this and the 3 arrows and all that, right? And I actually see some of my clients and good friends as well. They have been in crypto trading investment for years, and some of them are really hurt. I mean, by this wave, and some of them, I think a couple of clients actually is filed for bankruptcy indeed, for whatever reasons and all that, right? And I think it's a really tricky question, because when I first look at that Bitcoin and all that, it was just below $200 back in those days, right? But the tricky question is at what the right timing to allow the retail to come in to buy something as simple as Bitcoin Ethereum, right? So even for this way, right, you can go from over 60,000 down to 20,000, and a lot of investors will got panic. And they will hurt a lot of the for the retails, right? They need the money for the daily living, right? For the school fees or for the thing. So, but the trick is that if you allow, so back in those days, if you allow the retail to join the game at the $200, right? Most of the Hong Kong people will be rich by now. That's one argument. But if they join at the 60K, then they could be quite 2/3 of the wealth will have gone by then. So I think. Yeah, it's really tricky. I actually encourage some of my friends to join. Let's say something, one of the most successful, right? Like StepN, right? Is one of the successful project. But even StepN, there's not to say no terror, right? Yeah, it's dropped a lot for even on the pricing. So I feel bad about this, and it's really tricky question. Some of the measures, either educations or knowledge-based tests and all that, I think they should all come in. I mean, in place. And the other thing is about the wallet management. That will be really tricky, because one of the most advantage of crypto over the fiat is that you can have control of your assets. So, and you can bring it anywhere. So one of my advocates, one of the reasons why we're big advocates for crypto is that you can bring anywhere. If you want to move to an address thing, if you want to move to Taiwan or Thailand or wherever, you can just only bring your wallet, your core wallet, and your ledger, right? And you go anywhere and you can liquidate it and get the local currency. But at the same time, as a lawyer, I've seen a lot of this bill and a lot of this bill on lost crypto assets, even between couples, even between partners, even between even within the whole firm. So the big question is that do you allow the retail to withdraw the crypto into their own wallet, and if so, how to make sure they will be safely guarded? I think that is main question. I think lastly is about the issuer. So even some of the what sort of tokens or cryptocurrency should be allowed to be listed on the, of course, the licensed crypto exchange, right? Or I don't know, OSL or HKU or whatever. But even for some of the biggest issuers these days, right? A lot of their founders are not so well known, are not so easily located. If anything go bad, right? Even for, let's say, Terra, right? It's not hard to actually get to have a recourse against their founder, right? And not to say some of the others. And most of the white paper or whatever documents that they have issues are not so well drafted. They are not drafted by some of the lawyers here, right? There sometimes they could be just poorly drafted from the business people. So should they, if they are going to be listed on the exchange, should that be a sponsor system, or someone should sponsor and do the due diligence on them? And then should they issue a more proper information memorandum before they get listed and all that? And then they should have someone to be identified and have a recourse, let's say even using Hong Kong jurisdiction, Hong Kong court, against all of the issuers before they could be listed and should be listed. I think these are some of the really big questions to be discussed in order to protect the retail or any of the investors, not to say the retail, right? Even the professional investors.
Thanks so much, Henry. So for those who didn't know, Henry and I knew each other when we were both working at investment banks as sponsors. So the sponsor thing, we like the concept, but actually we'll come back to that one a little bit, because how the current regime works is because there isn't really a sponsor regime where you intermediate by having an investment bank or as a sponsor come in. Right now, the exchanges are the ones that have to do the due diligence, which really is kind of a different kind of approach, right? But I wanted to ask you one quick question before we should go over to Frankie. So Ben actually bifurcated the point. So he, the mainstream kind of large traditional virtual asset issuers, right? So maybe that one you don't need put limits. So it sounds like you are worried about retail and people losing their shirts. So maybe we should have a bifurcation. You seems like you kind of like the aggregate size of investment by individuals. You don't want grandma to put all in, right? And therefore all your inheritance goes away. Is that fair? Henry, is that what you're saying?
Yeah. That's they should be protected because I've seen some cases where these are the people who can get easy panic, right? Yeah. If you just said that, I've seen that, the ups and downs, there's different cycles for the cryptocurrencies, right? So if you hold them, if you're being the holder and hold them long enough, right? For well, that's the big Ethereum, right? Then they will do pretty well. But I think that's not for as you just mentioned, a lot of the people may not be so patient, right? And if they go all in, they do need them money for some of the things and all that, right?
No, thank you. No, I just want to clarify and develop that a little bit. Also,
I just want to come in for a very short comment to echo Henry. I'm sure many of you remember that back in 2017, when China government came out with the big ban statement, banning everything crypto in September, right? At the time, Bitcoin is only $4,000 before it went all the way up to 18,000. Right, so they actually saved a lot of people.
So that's an interesting perspective. But no, I think that's right. And that's why the SFC and others have been so worried about retail. Frankie, love to hear your thoughts.
Thank you. It's interesting to see the poll engagement, seeing the first response to the first questions. Actually 94% of our crowd is saying that it should be open to retailers. I actually had the same question with another event this morning, but with institutional bankers as in the audience. Should the regime to opening to retailers? And of course, the answer or the response is completely different. So I imagine that with our attendees in this roundtable, actually a lot of us are actually retailers and supporting this development. So that's one observation I find it interesting is really about the crowd that we're speaking with. And another thing I saw very engaging comments in the chat box. I've been monitoring it, and it's very interesting to a point to make in relation to why the differentiation retail or non-retail. Is it because of the protection of investors? And then I saw even a comment saying that why Mark 6 is also a high risk, a game of chance instead of game of skills. I don't comment on that, but I feel like we have heard similar arguments. And in fact, retailers or professional investors or not, is not a question I just want to supplement as a lawyer from regulatory angle. It's not a position unique to a Hong Kong regulator to consider. So if we look wider the picture about regulating virtual access at that exchange activities or service providers, is really a global effort now. Since 2019 with the Financial Action Task Force, FATF, requiring the setting out the requirements. So looking at the broader picture, we are aware that Singapore and elsewhere all looking at having certain rules now, but retail or not, professional investor or not, Singapore consider it, Hong Kong consider it. And it's interesting turn for our participants today that it appears in the past few weeks or so, there seems to be some kind of like change or slight change in position in how the other countries like Singapore is looking at retail or not, or more protective to retailers and giving limiting certain investment to professional investors, whereas Hong Kong, we see from the SFC speech earlier this week that it seems to be studying the potential of opening up certain investment and the consultation for retail investors. So it's not like all gloomy in terms of Hong Kong is quite overprotective, or how do you judge the risk as such of is arbitrarily saying that, okay, is digital access or crypto then is too high risk. I think actually the regulator do see that there's room to open up and embrace that. But I find it very interesting that our participants is seeing that interesting question. Why is it higher risk? Is game of chance like Mark 6 less of a high risk, but maybe the capital involved is relatively smaller in a game of chance. And also another type of investment. And when we think about protecting investor, what about real estate investment? It also an area, okay, it's very expensive investment. It can be high risk as well. Where do we draw the line? I think we really want to keep our eyes open in the coming consultation in Hong Kong as to how Hong Kong is pivoting to implement the FATF rules on AML, regulating the virtual access service provider, but where to pivot and put our line and our position in the international market.
Great. Thanks for the thoughts, Frankie. And you're totally right. Instos, as I mentioned earlier on, I invented some instos to come on board, but they're limited to what they felt they can say. But the other thing is, you open the door on gambling legislation, right? Which happens all over the place. So whenever doing the analysis, I remember when the ICOs were happening, we did that analysis, right? Is it actually gambling that trigger any gambling laws, right? Louis, love to hear your thoughts, especially since you work with a lot of companies too, and the impressions you're getting.
Yeah, I just want to make a different argument since everyone is talking about something. As an ex-regulator, I just want to say something which is maybe from a regulator's point of view, so that people in the audience understand where the regulators come from, because it seems that there's a few audience saying that, oh, we should do this and do that. Because from the regulator's point of view, they need to protect the investing public. This to them is something new. They're looking into this. And as with all new products, they are several years behind. I mean, you have to let them catch up. They are catching up. And as an industry, I feel we need to feed information to the regulators and authorities as much as we can, so that they can make the right judgment call. And also from a regulatory point of view, all the existing rules that they're thinking about, they will be splitting into two things. One is, okay, how do we regulate, the stakeholders in terms of, the exchanges and let's say the brokers and also the issuers? I mean, how did they go about it? Of course, they say, oh, from a risk point perspective, they probably want to sort of regulate against the centralized exchanges first, how they get the, let's say, the tokens on board, how they do the listing on that part. Okay, should we have a limit, let's say, on who to offer to retail investors? And if so, what are the parameters that we should be setting in those parameters? These are for retail, these are for institutions. So on the other side is for the investors. What are the protections? Suitability, of course, is a nice word that everyone wants to talk about. But what is suitability? What actually you helpfully listed out, Brian, is these are all the points that if I am doing it, let's say from a SSC perspective, considering a suitability program, these may be the questions that I will ask and make sure that I have it in my program before I offer to the retail public. Every single one of them is valid question. It's a matter of how much weight we put on everything. And it depends on each organization and how you set it out. So it is just from a regulator's point of view. So I won't say fight in the corner of the regulators, but I want to give a different point of view of where what the regulators are thinking. And we should be thinking, okay, Hong Kong may be a bit behind now, but you look at what is happening beforehand. I mean, when we launched everything back in 2018, people are saying that, oh, already it's a bit restrictive, but looking at hindsight, maybe it's a good thing. And now, okay, we take a step further because we think that we have a solid base now. Let's push our boundaries a bit further and test the market a bit, and let's see where we go. Of course, I do not want to wait another 4 years before they come up with some new rules and regulations, but it is a positive thing for them to go ahead with it. But to echo what Nathan is saying, actually, before, personally, I want to see more on how SFC is going to develop on the derivative side. I mean, this to me is needed at the moment, because what's going on right now, we all talk about literally the cash market, just the spot market only. But for a proper ecosystem in this particular asset that we're looking into, the derivative side of things, the future side of things, we need those to be in place to have a healthy system. So that's my 2 cents.
Great, because right now, as I understand, Louis, the exchanges are not allowed to trade derivatives, right? So that limits its hedging abilities. That's the point, right, Nathan and Louis?
Yes. Yes.
And so actually, it's increasing the risks of these exchanges.
Yes. And also you also think about I don't think there's any portfolio managers yet, the VAPMs, the type 9s. I mean, if you ask them, actually, the ability of them to do hedging behind the scenes is also very limited. Okay, it's a criticism of the regulators right now, whether this could be open, but I think they will surely consider this going down the line, because in terms of even offering a simple crypto-related fund product, the behind the scenes hedging is very limited right now. So I wish that this could be happening sooner, but I'm sure the regulators are looking into this.
And it's like, again, similar to the retail point, it's largely pushing, the good players to go offshore to get their hedging. So I think if that could be brought onshore, I think that'd be a massive benefit.
So to explore that just a little bit further, the concern is, rather than just hedging, they're doing prop trading, right? They're going positions, right? So
I mean, they could be. There's obviously a variety of strategies you could employ, but if Hong Kong can't offer the derivatives that they need to hedge their exposure, then they have to go to offshore platforms, and those funds are immediately at risk on offshore platforms in a way that perhaps they're less risky in Hong Kong. So again, if you're going to say no derivatives, fine, but the incentive then is to push the funds offshore.
Right. Well, lots to explore there. But I want to go over to Christy. So Christy actually helped one of the first crowdfunding platforms here in Hong Kong, right? So love to hear your take on all these.
Well, I think, first of all, as I say, I think we're all singing from the same hymn sheet. I'm from the South, I'm from Texas. So I think, I'll say that as an initial kind of a way to onset the conversation. But, for the past 12 years, I've been doing a lot in the securities, regulatory compliance and licensing space. So I did do the first equity crowdfunding and the first robo-advisors in Hong Kong. And in fact, I kind of was a bit laughing under my breath when they said, oh, ETFs, we need to look at that. And that's being really encouraged, because when we were trying to do robo-advisory, ETFs were very risky. I don't know who's going to be basically checking behind the box on this. And that was just like, wow, oh gosh, what are you getting into? So I find it quite interesting that now even with crypto, we're looking at it. One of the things I think that from my point of view, when I give any discussions or talks about virtual assets, digital assets, I kind of split it into two buckets, because for me, I kind of, as Brian rightly said, I'm more on the securities side of things. I'm not on the crypto, but of course we do crypto exchanges, we do regulatory compliance, because unfortunately, despite the fact that we talked about this being more like Forex, of course, the argument we get into, is it a security? Is it not a security? Is it a draft? Is it an Apple? What is it? So that's the kind of, and it's even basically being referred to in the consultations and things saying, oh, you're going to have legal opinions around whether or not it's a security. Is that really important or not? I'm not sure. But what I would say is that I'm going to kind of wear the hat of the securities side of it, because DLA has a wholly owned subsidiary called Toco. It's a tokenization engine, which basically spits out and does all sorts of amazing things in the tokenization space. And we've been trying to assist from end-to-end deals, and we've got several with, deals with a few people on this panel. We've been trying to get out to the SFC for over a year now. So the issue is really, does this really cover all aspects? I think Nathan really put it well by saying it bifurcates somewhat the market. I tend to agree. Equity crowdfunding doesn't seem to get much out of this. If I'm a cryptocurrency exchange, you seem to get a lot. You get a lot of mileage. So I guess I wonder about the overall, and I think Emil mentioned this on a, if I were looking at this from a macro perspective, I think you put it, Brian, would I be looking to basically suggest? I think as a whole, it's broke, it needs to be fixed. We don't even have the type 11 license, type 12 license out that we've been waiting for a lot. Maybe that cures some of this, 11 at least. So, the fact that we're going through and putting a vast legislation through an AMLO bill, kind of special in and of itself, I find, but okay, just my comment as a lawyer. But I think, what I would have liked to have seen, or what I think the devil is in the detail, many people have mentioned that, but where are we trying to go? Because I don't know that there's been a blueprint. We just say, oh, we've got to allow retail and we've got to do all these things. Well, okay, great. But do we have a blueprint? Because we're being asked to do a public consultation. Some of us are being asked to consult on other things. But quite frankly, I feel like it's in a vacuum. I'm not sure where we're trying to go with this, because like I said, there's two buckets to this equation that we need to figure out. So if I can say I was slightly disappointed, however, the reason I was slightly disappointed is because I don't think some aspects of trying to really get a security token offering up and going, an exchange here. I think there's great possibility, and why not? I think I was a bit disappointed the fact that there's not much being offered there. They've thrown it back out, and I think I've got it open here. Do you have any suggestions on the regulatory requirements that should apply to STOs? So that it seems like there's not quite much known about it. So fair enough, happy to give some ideas around, or what other maybe look at. We happen to be involved in some other jurisdictions legislation, and we're looking at that. And to some extent, you could make it a lot easier by just saying they're all virtual assets and they all need to be regulated to some extent. But to what extent do they need to be regulated? And then can we slot it in? But that's my opinion on the fact. I think we need to have law reform in this area, and the fact that we're going through LegCo already to get this done. I'm a little bit, like I said, slightly disappointed that we may be, the SFC has been always criticized for being very slow, but I think this is the one time they may be going slightly too fast on trying to get this pushed through by March next year.
Thanks so much, Christy. Again, declaration of interest. Some of my students who actually have worked with Toco as well before. So your bifurcation concern is with STOs and the VASP kind of regimes, right?
It is, because if I'm wearing the various hats of the people I've helped get licensed, etc. Are they getting much mileage? Are they getting anything? Because I don't feel like maybe retail's being, maybe I'm wrong, but when we look through this, we don't really think that equity crowdfunding is maybe getting kind of the ability to go to retail. Maybe it will be a consequence of, but it does seem quite odd to me that you're allowing something such as a cryptocurrency to basically then offer to retail, but something as equity crowdfunding that's been vetted and it's highly regulated, that you're basically saying no, I'm sorry, it's still too risky. You still have to only let professional investors get involved. So I think it's not necessarily portraying Hong Kong in a democratic light in that respect, and I mean, because the fact is, I feel like it's creating different playing fields within the same SFC licensing regime. And the other aspect of it is that I think that when you look at it from should everyone be allowed to participate? Of course. And I think the fact is that, I think it had been previously always said that, all, we're one SFC, we license to all. That's what the opt-in scheme was around and about, if you meet our licensing regime. I think that we slightly seem to be getting a little bit off-piste on that, but that's again my view of it. So I think it would be quite helpful to just bring it all together, bring it in, and see if you can kind of make it work. But I think it's a little bit of a fudge slightly at the moment.
Interesting. Thanks so much, Christy. I want to switch gears a little bit now, and luckily you did mention ETFs. So Rocky's a funds lawyer, right? So for those who are not lawyers, there are lots of different areas of the law, and different people focus on different things. So the ETF announcement was really welcomed by a lot in the community. Love to hear your thoughts, Rocky.
Yeah, I think it's very exciting news, and it goes back to kind of what Christy mentioned in terms of direction of where we're heading to out of all of this. The way I see it, the ETF is really helping what I call the institutionalization of crypto, the environment. What I mean institutionalize is not to forget about retail. It's not about who can get access. It's to basically bring the traditional financial institution into the game, bring our existing financial framework, infrastructure into the game. And on the other side, also bring the kind of the new startup crypto operators together. And I think that's very important to have a healthy and sustainable environment. For ETFs, it's a perfect way to come in. I think Sam mentioned earlier, there are areas that Hong Kong can still grab and pull. And it could well be one area. There are ETFs, similar concept, buying into CME futures, Bitcoin ETFs in the US. In Europe, there are quite a few of them. In the region, it's definitely we can be there, and we can certainly compete internationally. And the way I've talked to a few kind of the issuers, operators, it's all very exciting. But I think a point Neil mentioned before, it's about the details, how user friendly, how ready are all stakeholders to join the game, so to speak, because ETFs is not just about the manager. You need the whole suite of stakeholders. You need the trustee, you need the custodian, market makers, participating dealers, the futures brokers. They are all thinking about it. They're all very excited. And I think it's a particular area that I think it's definitely in the right direction to show the government push for institutionalizing the crypto environment in Hong Kong.
Thanks. I never really thought about the ETFs as being institutionalized from the insto space, but so that's interesting. So again, that's what I say about capital markets too. When people want to set up an exchange, I say you still have all these other players, the same way the ETF market has, right? Then you need to pull it all together. So any immediate reactions to the issued circular regarding authorization of ETFs for future VAs?
Yeah, I think it's in a way the exposure is good. It gives them a perfectly way for traditional financial institutions to go in. It's exposure to exchange traded futures, cash settled, less worry about kind of financial crime perspective, AML perspective. So it's definitely it's the good start of it. The product initially is very simple. Not a lot, but we need to start somewhere. And it's comparable to what we have, for example, in US. We work on a few US ETFs as well, similar structures, products. It's not to say the Hong Kong is very limited, it's or lagging behind, but we need to start somewhere. And whether we can have the inverse one later on, leverage one later on, I would say definitely we will have it, but we need to start somewhere, and it's a very good start.
Great, thanks so much for that, Rocky. And then last but not least, I haven't forgotten about you, Hoi. So one of the areas of development also was in terms of a statement about the government reviewing the property rights for tokenized assets and legality of smart contracts. So Hoi's a tech lawyer, right? So the thing is, I joke, a lot of lawyers are now salivating. You don't know the number of research projects my students have done over the last few years about looking at these. And you've got the UK has come up with strong statements, right, from the bar and the like. So maybe I think we maybe at Hong Kong U Law School, working together with the industry, we should create, you know, it won't be an opinion, but really a direction in terms of this analysis. Boy, love your thoughts.
You know, Brian, you just know the way to my heart. You know what I was looking out for in that few pages from the government. I mean, my first thought when I saw that paragraph 8 and that one paragraph on property rights of tokenized assets was it put in this paper in the last towards the end, because it to me it didn't quite fit in with the rest of the paper. And I say that because, you know, the UK Law Reform Commission, as you very well know, has already come out and said very clearly they consider smart contracts to be legally enforceable. There have been various cases in different common law jurisdictions that have been pretty clear in saying different types of cryptocurrencies, whether Bitcoin or NFTs or otherwise, are also recognized as property. So, you know, to me, I wasn't exactly sure what the government was trying to say here in terms of open to future review of property rights. I look forward to what that may be, and perhaps that's a separate project with your team, Brian, in terms of looking into this. But, you know, there's a lot of research out there already. But I guess just to deviate from that a little bit, I guess from my side, as more from the kind of technology lawyer side and not the financial regulatory or securities lawyer side, you know, like what we're really interested in is like things around kind of contractual disputes. So, you know, disconnects between how a smart contract operates and how the terms and conditions, like written on paper or digital or PDF, whatever, operates. That's one area. You know, we'll be very interested to see how in the next few years, how regulators in Hong Kong look at DeFi. And you know, the control, particularly the point around control. I mean, a lot of us, I'm sure, are aware of the US regulators lately in particular starting to target, you know, DeFi isn't just DeFi and no one's in control, but actually looking at kind of a mixture of business and technological points to see who controls the organization.
You mean CFTC's lawsuit against the DAO?
Yeah, exactly.
Right?
You know it, right? So, you know, that's going to be a very interesting area. So, you know, I think going back to that paragraph 8 and what the government said, it'll be interesting to see what they do. And I'm very interested to see some of the non-financial regulatory areas of dispute and law that will come out in Hong Kong in the next few years, and hopefully they'll take some of the trends from the overseas jurisdictions and learnings to date. So that's what I
want to be more provocative than that. We want to lead. We don't just want to wait for people to tell us what to do, right? So in Hong Kong, as you would know, recently the Law Reform Commission here issued you know, they published a consultation in relation to cybersecurity.
Oh,
right? Right? I know how you're way to your heart, right?
Oh.
So I mean, these are real stuff. So now there's the UK Law Reform Commission, but that's all on English law. Yes. We are now Hong Kong law. One of the pillars, right, from the north is that, you know, Hong Kong is going to be a center for law and dispute resolution. Yeah. So I think we need to do a research piece on doing all this interpretation under Hong Kong law, right? Hopefully with a lot of guidance from the UK, other common law jurisdictions, the Singaporean decisions and the like. So I think that's a project I look forward to launching with other interested folks here. Nathan, you had your hands up.
Yeah, just I guess a question for Hoy. I mean, do you see any mischief in recognizing the legality of smart contracts, in the sense that if you go down the law, code is law kind of route, if you got a rug pull that was executed validly under a smart contract, you know, where do you see that going? How does intent come into that?
You know, that's I mean, look, quite frankly, I don't see as much of that in Hong Kong at the moment, but I'm sure you know, Nathan, that's an area of increasing dispute around the world. I mean, for the longest time, I mean, cryptocurrency as a industry, as an ethos, has always said code is law, what happens in the code stays on the code. That's what we agreed to. But, you know, I think, you know, for a lot of the people that I speak to anyway, I'm not speaking for the industry, but just for me personally, you know, there's still a much greater understanding of how the contract operates on paper as opposed to how it operates on the code. And so, you know, and so fundamentally, a lot of the time that there is a real disconnect between the code and the paper, so to say. So for me as a lawyer, I would say I would still rely on the paper more than the code, but that's probably something where a lot of I would like input from the other law firms here as well. Probably something where we could all do a bit of a better job in terms of advising clients and kind of bridging that disconnect, because you're right, Nathan, there is a real disconnect, and disputes really depends on the factual circumstances. So yeah.
So, and I think I recall Julia saying that she wants the smart contracts to be audited. I don't think a lawyer is going to be doing that. So who's going to be doing that, right? So I think the big four are going to come. So you need this legal skills, but you also need the technology skills. Henry.
Yeah, for one of the things about Hoy just mentioned, right? I think one of the points is say, we still need a debate on the property right for the cryptocurrencies. I think I just want to maybe elaborate. What I guess is that because that's a very interesting case law in Singapore. So I'm just trying to take out actually, like I did the research recently on that. So the question back in the Singaporean court is that whether that's a property right in the if I remember, it's a Bored Ape. So what happens is that is the Bored Ape litigation, and the question is, what's the nature of the Bored Ape? Is a property right residual in that Bored Ape? And they have gone through the page analysis, and from the Singapore, and interestingly, because based on the common law system, right? So the court basically say, that's not the property in the real estate property sense, and that's not a choice in action, but they go back to the fundamental pillar, the four major characteristics of a property, and then they go in a very convoluted way and say, and after all this analysis and all that, as a court, they still think there's a property right residing in the Bored Ape, and I think that is one of the things, but they admit that that's not something clear in the law itself, and they may need to change the law to address that, like whether because that's not something so somebody remember the first lesson in a property law, right? That was like hundreds of years ago. Then we may need to change that, address that, and have a more clearer definition as to what sort of property right actually in the cryptocurrency and different kind of virtual assets, including NFTs, metaverse, and all this.
It's Janish S.O. Rajkumar is the name of the case, right?
Always, yeah.
No, but again, that's under Singapore law, so we need to develop that body of law here in Hong Kong. Sean.
Only two very points. I think piggyback on what Hoy was talking about before in terms of the smart contract and codifying its law. I think there's one critical factor that many folks haven't really looked at, which is, are these smart contracts actually owned by someone, or are these community driven? There is, I was chatting with I guess someone else on the chat here. I mean, if you're talking about a public network that is community driven rather than a single entity company driven, there are a lot of different nuances that really needs to be pay attention to. There's no clear answer to that at the moment. But you see the sanctions towards tornado cash, the arrest and the arrest of a developer within a public network system. I mean, like, how does that work? If we were to look in the old days with a switchboard operator that happened to have plugged the cable to connect two drug dealers make deal using that phone line, is that person liable because they're assisting in a potential crime that's happening, and so on and so forth. So there's still a lot of debate in that regard. The other thing I also want to mention is that this notion of kind of rights and NFTs and whatnot, I think there's still a lot of definition that really need to be put in place, and we constantly are trying to take this brand new technology and this relatively new asset class and trying to shove it into existing policies and procedures that obviously we all know and love, right? But in some cases that may not actually fit. So rather than trying to jam it into a box, I certainly like to see at least an international efforts to go the other way as well, in parallel, to see how some of the regulations and policy can actually evolve, or potentially not even evolve from where they are today from existing asset classes, but actually created from new. I am seeing some of that efforts now. Australia is doing a token mapping exercise. I'm hoping that will be leading into something similar in that regard. Like I mentioned before, Switzerland is going through this classification process. That's also helpful. They're also trying to come up with a DAO-centric regulation as well. And I know a year ago when they started looking into it, they thought they were going to map it into an existing trust type of structure. And then now they decided, you know what, that doesn't work, right? Because trust doesn't quite allow people to come in and out as freely as what you would do with a DAO. So in order to actually create something that mimics what a decentralized organization may look like, they're now going through an exercise of trying to create something new. So I think these type of efforts will be helpful. These are obviously much longer time conversation, but I do want to bring that up. Rather than going one way, I think we can go both ways.
I love that, Sean. For the non-lawyer here, you'll note that a lot of the lawyers here actually are multiple jurisdictionally based. You know, so we do actually look at it from across the board. And I love that now we're getting into it, but just when we're hitting the hour. Frankie, and then over to Louis, and then I have to close things off. So over to you, Frankie, please.
Thank you. I will just keep it brief when just respond to Henry, you mentioned the Board 8 case in Singapore. The significance is that there is a common law jurisdiction that recognizes NFT as property, which is an important classification that's protected by law. Another important issue which I have a chance to explore last week at the Hong Kong Arbitration Week is enforceability of such awards, court judgments, or arbitration decisions, because we lawyers or law school, when we do law, we know there is a jurisdictional boundary, and in the digital asset space, it's really from day one without border. And interestingly, back to the topic today, we're studying Hong Kong, the way ahead as an international virtual asset center. Besides regulations on whether to regulate certain service provider, which we have covered, I think the enforceability in case there are disputes, which invariably will happen when economic activities take place, is something we should give thoughts about, and something that actually the Hong Kong Arbitration Week in Hong Kong, I think Dispute Circle is also actively considering as making Hong Kong as a more holistic approach, a more welcoming place for virtual access development.
Thank you, Frankie. So not only does the law need to be better developed, but we need better experts in the law to actually litigate it and arbitrate it here in Hong Kong, right? Again, Hong Kong as being a dispute resolution hub. Last but not least, for the day, Louis.
Thanks, Brian. Thanks for letting me in last one. Actually, I want to echo what Sean said, because I think it's a topic that I think both of us touched on a couple months ago when we met up. Is that I think what we're doing, me included, we always talk about all the financial assets only and talk about the products that we're seeing. But I think more importantly, in Hong Kong, if we want to really bring it forward, how do we want to really look after the industry as a whole? We need to know what's out there, because at the moment, it's like a firefight. You're literally thinking, oh, there's something like this happening, but have the government or the authorities got all the information that they need? Is it a mapping exercise? Maybe, but it's like they need to collect the information first, so that they need to know how wide is the sea, how deep is the sea, before they can really regulate if they want to on anything. I think that is an exercise that if you want to put this industry forward, I think they have to do something about it.
What a great way to end it. Again, just when we're hitting the hour, we're now getting into it, right? So hopefully, tell me if I'm crazy. We are having so many people on a panel. Maybe yes, maybe no. Maybe I should have not 16 people, but maybe 10 next time or something. Again, what I wanted to do was have this discussion. It's clearly multifaceted. There are different people approaching from different perspectives. The aim here is for this to be the beginning of a dialogue, a beginning of a network. And so with this, I wanted to firstly thank you all so much for joining us here today. I certainly found it very enriching. I hope you all did as well, together with the audience. We still have 100 people on, so we kept them on for an hour and a half, in the middle of a T8. Secondly, I wanted to soft announce the launch of this network I want to create, right? So because again, as now we're looking at more regulations, more law in the different facets. Frankie, I love that you talk about enforceability. Only lawyers talk about enforceability, right? Or people who actually end up having to enforce the decision, right? Suddenly think about these situations, and it is important ultimately if you want to exercise your rights. So hopefully you will join me. This is the first of lots to come. If you can join us as part of our LITE Lab community on this virtual asset space, We'll send you invitations to join us here as we continue on with this discussion. Next time in person. Again, the idea is to create the community. We'd all go for drinks afterwards, right? But sorry, everybody can have their own drinks at home, I think, right? But not here. But look, at the next time, we'll host it at Hong Kong U and then maybe across the different places across Hong Kong. So thank you very much all for that. I want to thank you all once again so very much. Again, love to get your feedback in relation to this format as well. Because again, maybe it was too long because there are too many people, so you didn't have enough chance to talk. But and maybe now that we've had the first one, we can have a separate one just on the retail. We can have a separate one just on ETFs, a separate one just on derivatives, a separate one just on smart contracts. So again, would love to get your feedback in terms of how we continue the discussion again to chart the way for Hong Kong as a virtual asset center and the road forward. Thank you very much for joining us again. And thank you for our audience for joining us too. Virtual round for everyone. Thank you very much.
Thank you. Have a good evening. Bye-bye.
Yes, stay safe, everyone. Have a great weekend.
Thank you, everyone.